Hello everyone, welcome back to FinTales Daily. It's June 18th, 2026, and we have got some big updates from the world of tech, banking, regulations, and global trade. From Apple warning about high prices to NSE planning a historic IPO and a new chances for Indian investors to buy global stocks, there's a plenty happening today. So let's dive right into our first story. Well, begin with the Apple and a trend that could affect millions of consumers worldwide. Apple CEO Tim Cook has indicated that higher prices for premium devices may be difficult to avoid in coming years. The reason is the explosive growth of artificial intelligence, which is creating massive demand for advanced memory chips and processors. As manufacturers compete for these critical components and production costs also rising sharply. Apple is expected to pass some of these additional costs on to the consumers through future iPhones, Macs, and iPads. So, if you are planning an upgrade, you may want to keep an eye on future pricing announcements. Now, while rising costs are creating challenges for the technology companies, regulatory authorities in India are dealing with a very different issue, that is financial accountability. And here is our next story. In a major development, the Central Bureau of Investigation has arrested the former CEO of Chandigarh's CREST in connection with an alleged 83 crore scam. According to the investigators, the case involves accusations related to misuse of the public funds, diversion of resources, and money laundering activities. The arrest sends a strong message that the authorities are tightening their focus on financial transparency and accountability, especially when public money is involved. From regulatory enforcement, let's move to a major announcement that could strengthen the economic ties between two of the world's largest economies. Prime Minister Narendra Modi has announced that the India UK Free Trade Agreement will officially come into effect on June 15th. This agreement is expected to significantly improve trade relations between the two countries by reducing tariff, simplifying business processes, and opening new opportunities for exporters and investors. Experts believe that the deal could benefit several sectors, including manufacturing, services, technology, and pharmaceuticals. As trade opportunities expand, regulators are also reminding investors to remain cautious while participating in financial markets. Now let's move to the next story that is about SEBI. India's market regulator SEBI has issued a warning regarding the trading of the unlisted shares through the unauthorized platforms. The regulator has advised investors to avoid buying or selling shares through unrecognized channels because such transactions may not provide the same level of protection available on regulated exchanges. In simple terms, if we talk, there is something goes wrong, investors may find it much harder to resolve disputes or recover losses. It's another reminder that while opportunities in the market can be attractive, safety and due diligence should always come first. Speaking of the financial markets, one of the biggest India's institution is preparing a historical milestone, and that is about the National Stock Exchange. Yes, the National Stock Exchange has officially filed for its long term awaited IPO, which is expected to be the worth around 30,000 crores. If completed as expected, it would become the largest public offering in Indian market history. One detail attracting significant attention is LIC's decision not to sell any of its stake during the IPO process. As one of the NSE's largest shareholder, LIC move is being viewed by many as a strong expression of confidence in the exchange future growth. And while investors are excited about the NSE story, there is another stock grabbed headlines with an impressive rally that is about IDBI. Yes, the shares of IDBI Bank jumped nearly 20% in a single trading session, reaching their highest level in several months. The rally was driven by optimism that the government may accelerate its plan to reduce its stake in the bank. Investors are closely watching developments because any progress in their divestment process could potentially unlock further value for shareholders. From Indian banking, now let's turn our attention to the world's most influential central bank. Yes, the US Federal Reserve has decided to keep interest rate unchanged for now. During his first policy meeting as Fed Chairman, Kevin Warsh noted that while economic growth remains relatively strong, inflation continues to be a concern. As a result, the central bank is not rushing towards interest rate cuts. In fact, policymakers are keeping a close watch on inflation trends before making their next move. And as we have often seen, decisions from the Federal Reserve tend to influence markets far beyond the United States also. Global investors responded positively to the Fed's latest decision. Yes, Japan's Nikkei index surged to a new record high above the 71,000 points, supported by continued enthusiasm around artificial intelligence and technology stocks. Meanwhile, South Korea's Kospi index also moved higher, reflecting strong investors' confidence across Asian markets. The rally highlights how global liquidity and optimism around technology continue to drive market momentum. Now, while markets search for opportunities, young professionals in India have an exciting opportunity for their own. Yes, the Reserve Bank of India has officially opened applications for its Young Professional Program 2026. This highly sought after initiative offers selected candidates a monthly stipend of 1.5 lakh along with the chance to work on important projects involving artificial intelligence, cybersecurity, financial system and economic research. For students and early career professionals interested in policymaking and finance, this could be a valuable career opportunity. The application deadline is July 6th, so interested candidates should apply well before the closing date. While the RBI is investing in future talent, SIB is working on reforms that could benefit long term investors. SEBI has announced important changes for alternative investment funds, commonly known as AIFCs. Under the previous regulations, fund managers often had to sell all remaining assets when a fund reached the end of its tenure, even if market conditions were unfavorable. The new framework provides greater flexibility by allowing certain assets to be retained or rolled over beyond the original fund period. Industry experts believe this change could help fund managers make better long term decisions and potentially protect investors' value. And finally, let's end with some good news for Indian investors looking beyond domestic markets. Investing in international stocks may soon become much more convenient for the Indian retail investors. Leading trading platforms including Zerodha, Grow, Angel One, and Upstocks had received approval through Gift City to expand access to global equities. This means investors could soon be able to buy international stocks and even fractional shares through platforms they already use regularly. It's another important step towards making global investment opportunities more accessible for Indian investors. And with that, we have reached our final segment for today. Let's wrap up the today's edition of the FinTales Daily. From Apple's warning about AI-driven prices increases to the National Stock Exchange historic IPO filing, the Fed's policy decisions, and new opportunities for global investing. Today's news once again shows how quickly the finance world continues to evolve. Now, we would love to hear your thoughts also. Do you think Apple customers will continue paying premium prices for AI powered devices, or could higher prices eventually slow down the demand? Share your views in the comments below. If you found today's market briefing useful, don't forget to like the video, subscribe to Fine Tales Daily, and turn on notifications so you never miss out our daily updates. Thank you for watching. Keep learning, keep investing wisely, and I will see you in the next episode. Thank you.